Good evening, everyone. How's everyone doing? Good. It's not very easy to follow Clive with that ultra high energy, so I'm going to do my best, but I don't think I can imitate that. So I might be a slightly lower energy level, but please bear with me. The great thing about today's presentations is that you can tell it's all actually quite true because each presentation is echoing the other. Many of the themes that Polo hit on, Clive also hit on. And so you can see different perspectives, but the underlying fundamentals are turning out to be quite true. And my presentation will be no different. So it'll echo some of the themes made by Clive and or Polo. However, I only have 3 content slides, so it'll not be as much information in front of you. So I'm going to take a slightly different approach. And I'm going to spend the first bit of my presentation actually just talking about myself, my journey, my entrepreneurial life, and hopefully that resonates a little bit with you. So I will start off with my introduction. My name is Bame. I'm from Botswana, born and raised. I'm very lucky that I was always very globally aware and exposed by my parents who traveled a lot and worked in different countries. And I was very lucky in getting a scholarship right out of high school to go study in the US. So I did my bachelor's in California. I studied economics and political science. And when I look back to that journey that allowed me to go and study in the States and do my bachelor's in California, it was very much about being enterprising, about being open to ideas, about wanting to learn, I wasn't able to travel physically maybe then, but I certainly did travel in terms of my learning, what I read, what I chose to expose myself to. And the world was smaller then, of course, because you didn't have the internet. But I went to libraries, I read books, I read magazines, I talked to people, I had pen pals, yeah. So it was really all about enterprising. Even the scholarship that I got in order to study in the US, that was very much about enterprising, writing to schools and saying, I'm this kid in Botswana, I want to come to your school, I want to learn this. And so I think the principles of wanting to have an end destination, of wanting to engage in the journey, of open-mindedness, of willingness to learn, engage in conversation, are very, very important. They're quite fundamental in entrepreneurship. I think this echoes one of the points that Polo was making, that an entrepreneur needs to be open to learning, open to feedback. And so that, I think, has been a big part of my journey, in being open to being exposed and to ideas and to people from any type of thinking, ideology, religion, culture, etc. So very quickly, in terms of what you are thinking about, what you need to do in order for your venture to be ready for funding. And I think the key thing here, going back to my point about how there's an over-romanticization of entrepreneurship these days, is that I see now that because venture capital is becoming part of popular culture, is that people want to become very good at raising money, or they want to form relationships with venture capitalists. And I actually think that that's not necessarily the best thing to do. I think what you really want to do is to build a great business. And I think if you build a great business, you will be effective at raising the money. And so rather than focusing as much on, let me get to know the venture capitalists, let me meet them, let me know who raised money last week, go deep into your business. Have a great product, have a terrific team, as Clive was mentioning and emphasizing. Make sure you understand your customers, provide for your customers, innovate for your customers, have customers, generate revenue. have unit economics that work and can be scaled. We all know that, profit is the order of the day. And so if you have these fundamentals right about your business and prove that you can grow, then I think you can raise money. And so the objective doesn't need to be over-focused on venture capitalists and on fundraising. It should instead be on the business itself, no matter what the industry is. And I think then that you can be effective in raising money. So an underlying point that I want to make today is let's not over-romanticize and focus so much on venture capital and venture capitalists and on us, on the investors. Let's focus more on you getting to know your business, your sector, your customers, and on you being obsessed with building the very best business possible. Because then I think when you have a conversation about funding, there will be much more resonance from us, the investors. And I also think instead of you wanting to raise money, I think there should be more of a focus from you, the entrepreneurs, on who you're raising money from and what comes along with the money, because really money is only part of it. For us, as you heard, I said we invest in companies, and in our partnership with those companies and those entrepreneurs, we add value in a multitude of ways that I described. And the question for you is, what are those multitudes of ways that an investor can provide to me? And therefore, which investor do I want? It might be Clive, given what he can provide. It might be Polo, it might be somebody else. But you've got to ask yourself the question, what does partnership with this investor entail, particularly beyond the money? Because I think then you go into that discussion with your own agenda, you know what you want, besides $2 million for your company, and the chances of success are much better. You can have money plus ABCD, which I think is terrific. So, you may want an advisor. On every company that I just mentioned that I've invested in, I'm on the board or on the advisory board. I am an advisor to these companies, or business development, network, strategic partner. And my final slide, I mentioned that I have only 3 slides, is what you should be thinking about as you seek to attract that investment. What instrument do you want? Should this be debt? Should this be equity? And what is right for your business, for the cash flows that are in your business? What sort of dilution do you really need? Do you need to raise money? Or are you seeking validation in raising money? Or can you do okay and grow your business without raising outside capital? Who do you want that money from, and what should come from it? What runway do you have, and what runway do you want after you get that money? Do you have 5 months to go now without raising money? And when you raise money, do you want to raise it for 5 months, 20 months, or however long? You need to be very obsessed with your cash flow and your cash curve and be thinking about that as you raise money. Where's this money going? What is the use of funds? And that should be narrow, targeted towards specific goals, not to doing everything. Team, offices, technology, hardware, travel for sales, it should be quite targeted for the next few milestones. How much control do you want to maintain in your business? Because obviously with each funding round, you lose some control. Or are you going to be like one of these guys in Silicon Valley that has multiple classes of shares, so you can maintain control even as you dilute? And is that something that investors are willing to entertain? Maybe, maybe not. Some people you want on your board because they can advise, because they provide a halo effect to your business with other investors, customers, regulators, and so forth. So think very carefully about that. Your cap table is also important. Don't look at your fundraising as an event. Look at it as part of a journey that will be indelible when people look at your journey going forward. So if you do a fundraising deal now, which skews your cap table one way or another, then it could make your business difficult to invest in by other investors later. So always think of that long term. And what is the end game? Where am I trying to get to? Do I really need a $10 million investment now? Or can I do with $500,000 of investment? And then lastly, of course, valuation. You've got to have an idea of what your business is worth, but similar to my point about not, I think, being obsessed with venture capital and investment in its moment in the sun in our popular culture, I think also while views on your valuation, don't let it be everything. Again, it then becomes a validation rather than the business and its effect on society, on customers, being the validation. Thank you very much.